Welcome to the Land to Lots podcast, powered by Launch Development Finance Advisors. And now your host, Carter Froelich.
Welcome, everybody. It's Carter Froelich, and glad to be before you again today with another episode of the Land to Lots podcast. Today, I welcome to the stage two of my good friends and colleagues who I've known for more years than I care to remember, Sam Hartman and Kyle Thomas of D.A. Davidson. Sam, Kyle, welcome to the stage or to the podcast. Great to have you here today.
Thank you, Carter. Thanks for hosting us. Happy to be here. Look forward to our conversation and excited to get underway.
Great. And Kyle and Sam, you guys feel free to field these questions any way that you'd like to. But what I'd like to accomplish today is, because you are so prevalent in the municipal bond market, obviously, let's talk about the municipal bond market, where we're at today, high level overview of where the market's at, where it's going. All of our listeners are public home builders and land developers from California to Florida and everywhere in between. Obviously, the biggest issues that we have are infrastructure financing. Land is expensive, labor is expensive, infrastructure is expensive, cost of capital is expensive, and anything that we can do to lower that cost of capital and accelerate cash into the pro forma is paramount to our listeners. And then specifically, I would like to get into talking about the launch bond. And because D.A. Davidson and Launch are partners in this effort that have literally transformed the financing landscape in Texas. So with that as kind of our groundwork of what we're going to be talking about today, as I tell our clients when I'm working with D.A. Davidson, is that D.A. Davidson is the largest, most effective underwriting firm that probably some of our clients have not heard about. And so I want to start there. What makes D.A. Davidson so effective? And could you tell us a little bit about yourself, about D.A. Davidson, and the role that you play in the non-rated transaction space?
Yeah, sure, Carter. Thanks. I can jump into that to start. So first of all, I think it might be helpful just to give some context on the firm and then our specific team. So I'm the managing director of the development finance group within the fixed income division at D.A. Davidson. I physically sit in the Denver office, which is the hub of our fixed income group. It's where our primary underwriting desk is. Many of our sales and trading team are there. When we price a bond to the market, that's the desk that we price on is in Denver. Our role in the market as a broker dealer is we bring together the two parties, a borrower who is in need of funding and investors who are looking to invest capital in municipal debt. So we work with developers who are in need of funding public infrastructure. We utilize a variety of special district tools, tax increment. There's a variety of different tools across the country. And our primary objective is to bring capital to projects to fund public infrastructure using those different tools. You're right. Most people have not heard of our firm unless if they have worked in this space historically. While we are a bank, we're not a retail bank, so we don't have branches like you would see with a traditional bank. But we have about 1,500 employees. We're headquartered actually out of Great Falls, Montana, and we are a privately owned company, primarily owned by the employees. But we do a lot of work in the wealth management space, in equity capital markets, and then our group is in fixed income. So we are a well-known firm kind of in the world of public infrastructure funding for sure. And our team in particular, so Sam and I and the development finance group, our team focuses exclusively on funding public infrastructure for real estate developments. And that takes a lot of different forms across the country, whether it's in Texas, obviously there's municipal utility districts that are very prevalent. There's thousands of those. In Colorado, where I sit, we have metropolitan districts. Sam does a lot of work in Utah, where there's public infrastructure districts. So there's a lot of different tools that exist, but all of them have the same kind of overarching goal, and that's to leverage property taxes or assessments or sales taxes and using those revenues to repay public debt. I think it might be helpful just to take a quick step back and talk a little bit about the municipal bond
Sure.
market.
Yep.
So the treasury market for the U.S. government is enormous, right? Our government now has something like 37 trillion in debt. It'll be higher by the time we wrap up this call. So that's kind of the size of that market. The corporate bond market will see somewhere around 2 trillion in issuance a year, just as a frame of reference, versus 30 trillion for the US government. The muni market is about a quarter of the size of the corporate market. So this year projected around 500 billion in issuance in muni bonds. We live in this tiny little niche within that market of municipal bonds for early stage development projects, and funding the infrastructure for those projects. So I just think it's helpful to note that, you know, the further down you go in the stack, like the more specialized groups get, and the role we play is really to work on real estate projects, finding different ways to leverage the public infrastructure tools that exist, and provide capital early on in a project's life cycle.
Yeah, I think I would add to that, just to give you a sense of scale. Just within the last quarter, so Q4 of 2024, we were involved in just under $1 billion of par. And so, while Kyle mentions the broad market, I think in this niche of the world, D.A. Davidson is one of the most prominent underwriters of non-rated municipal bonds for early stage development in the country. So it's kind of funny. I think it's safe to say that the general public isn't familiar with special district financing and who the players are, including my wife, who just knows that I do something with bonds and that I say the word cap I a lot. And then I would say those in the real estate world have a better idea of this space, depending on what state they're in. Obviously, you know, Texas and MUDs and Colorado and Utah are familiar with special districts. But even then, I think folks in the space might have more awareness of investment banks that have a retail arm or a consumer-facing presence. D.A. Davidson does non-rated early stage development financing extremely well, and those on the street and those in the public capital markets, kind of understand that.
And to that end, one of the questions we get from our clients is, who buys these bonds? And I know that's a little bit of a softball question, but who typically are you going out to when we're bringing out an issuance, whether it's in Utah, Colorado, New Mexico, Texas, Florida, what have you?
Yes, there are high yield municipal bond funds in the billions of dollars, that I would say there's, just like anything, you've got the top 10 high yield muni funds probably make up, I'm just guessing, just like the 80-20 rule, right? The vast majority of who purchases this paper, and then you've got kind of the long tail of, several hundred accounts who might buy, smaller portions.
Yeah, and what I'll add to that is, so I just because I was in preparation for this, curious, I looked at, for the Texas MUD forward financings. If you look at the investors in those bonds, there's 38 different funds that have purchased those. But to Sam's point, 80% of those are owned by the top 10. And so, that these are institutional funds that have a mandate to buy tax exempt debt. Ultimately, it's retail investors, people like you and I, who want to generate tax-exempt income that will send cash to those funds to invest in municipal bond debt. Some portion goes to investment grade, so think school districts, cities, water districts that are issuing investment grade debt. There's some interest to purchase non-rated debt because it comes with a higher coupon, and that ultimately those are the purchasers of these bonds. The sort of funds that purchase are names that many of your clients have heard of.
Right.
Nuveen, Invesco, First Eagle, Alliance, Vanguard, Goldman. These are well-known names, and yeah, BlackRock, professionals in this space, who we interface with on a daily basis, really.
Yeah. And so in other words, we're not going out selling these to 600 doctors and lawyers. We're talking 6 to 10 funds typically.
Yeah,
Correct.
I mean, I think it's important to know that the bonds we issue are often denominated in $100,000 increments.
Yeah.
So you got to have some scale to purchase these bonds, and by rule, there are certain rules around who can buy these bonds as a primary issuance, and so those funds that Kyle mentioned fall into that category.
And thanks, Sam, and Kyle, thanks. You guys gave me a lot of off ramps here that I want to talk about. So to our listeners, one of the things that you heard is that Kyle's based in Denver, and DA Davidson dominates the Metro District market in Colorado, and that will become very, very important as we go forward and talk about the launch bond. And the other thing is the relationship with the investors, because in my experience dealing with DA Davidson on multiple different transactions or across the United States, in my opinion, you guys have been so efficient. And by efficient, I mean when you price a bond issuance, it is the lowest vis-a-vis the competition in comparison to the spread of the coupon we get on the bonds versus the 30-year MMD. And I think I have my version of why I think you're so effective doing that. But could you tell the audience what that relationship is and how these bonds are priced and how you're able to drive such effective pricing? And to what I said earlier, meaning lowering that overall cost of capital to the capital stack for developers. So whoever would like to take the first stab at that, I look forward to you sharing your thoughts.
Sure, yeah, I can jump into that. So first of all, I think it might just be helpful to explain how the market functions. So this is a public market. There are buyers, there are sellers. Billions of dollars of bonds trade on a daily basis. So our goal in every transaction is to generate the lowest cost of capital for the client and the best overall outcome. Now, investors have the opposite goal, right? They represent their clients that put money into their fund, and they want to get the highest costs, right? The highest coupon. So, what gives us confidence and the reason why we are able to efficiently price and structure transactions is our consistency in the market. So in 2024, we did somewhere around 60 transactions. So that means we are talking to investors on a daily basis, really, as we're pricing these transactions, as we're marketing the bonds, as we're then trading these bonds in the secondary market. And so it's easy in the real estate world, that a broker who specializes in, retail transactions in a certain market is going to be much more efficient at selling that property than if they dabble and do 2 or 3 a year. Like, we do not dabble, right? We are specifically focused in this space. We're talking to these investors on a daily basis. And so when a project comes to us and we look at the overall credit and we say, okay, what's the status of entitlements? What are your builder contracts? What is your water situation? What is the private capital or developer equity that you have in the project? We take all of these factors and we structure what we think is the most efficient transaction and a transaction that the market is going to want to purchase. One of the biggest failures that an underwriter can have is you do all this work, you put together a transaction, you go to the market, and no one shows up to purchase, right?
Yeah.
So the whole goal is to put together a transaction investors want to buy that meets the client goals. And by having a transaction we know the market is going to want to purchase, that allows us to push the envelope on pricing to get the lowest possible outcome. Now, I'm not going to sit here and say that we are every time going to price at a lower yield than some other investment bank. That would be silly. The market is efficient. We are working with counterparties that are very sophisticated. They understand where bonds should price. I think our goal is to price transactions at the lowest level, knowing that we're not going to outsmart the market, if you will. They represent their investors, just like we do our clients.
Yeah, and I would add to that a little bit, just what I think differentiates our firm and is that oftentimes when we're working with Carter, with you and a developer, it's Kyle and I interfacing with the developer and as kind of the front men, if you will, and isolating and optimizing on structure and so forth. We have a team behind us as well that I think, one thing I'd like the listener to take away is if you were evaluating D.A. Davidson, you'd want to evaluate Kyle and I, but you'd also like to get a peek behind the curtain at who else is involved. And the folks on our sales and trading desk have been working at D.A. Davidson for the leaders on the desk for over 20 years each. So, Don Giannetti, Brad Fawcett, and the others, which also do a great job, Chris and Hank and others. They have a deep relationship with the buyers of this paper, right? Going back years and years and years at D.A. Davidson. And so what that allows us to do is, when we're creating a solution for a client and a financing solution, and oftentimes there's wrinkles in a deal, or every deal's unique, as folks will know. We could actually go have some conversations with the biggest buyers of the paper and say, hey, we're thinking about doing it like this, and have a dialogue with them, so that again, after we've done 3 or 4 months of work and done the heavy lift, that our client knows that at the end of the road, there's going to be a successful execution.
Yep, exactly. And that's what I was thinking. And a couple of follow-up comments to what Kyle, you said, and Sam, what you said. Having, we only represent the private sector. We've only done it. So we're only concerned about the developer and what they're trying to accomplish. But our experience in working with you and where you're coming from in your backgrounds, and Sam, you were in the private sector, so you get it. And Kyle, you're here to dig in and understand the client's goals. So I rather than a lot of different jurisdictions and different types of districts that we're working with around the country, where we're working with underwriters that are representing the district as opposed to the developer, and you guys really come in and go, you're working along with us to accomplish the same goals. And that's the thing that I have really enjoyed as we work together across the country and structuring these transactions to accelerate cash into our clients' pro forma. The other thing, Sam, that you talked about, and having been on the conversations with your desk and with all of our clients as kind of a kickoff, to get that full transparency, you can really see, and that's what I was alluding to earlier. It's the fact that you've got guys and gals that have been on the desk for 20 years that know everybody. They know everybody, all the bond buyers, birthdays, their kids, and that goes a long ways in structuring these transactions. In fact, as we're going to be jumping into the launch bond, you guys knew where the market was turning before anybody else did, and we were able to switch some transactions out to make sure that they sold. Others did not see that and were held up as a result of that. And so I'm just amazed, and to our listeners, that's really, really important as it relates to having people on your team that know the market and know where it's going. Well, everybody, that takes care of our first episode of our discussion with Kyle Thomas and Sam Hartman of D.A. Davidson. Come back in 2 weeks for the second episode of our conversation.
You have been listening to the Land to Lots podcast with Carter Froelich. Follow us wherever you find your podcast to never miss a new episode.